Many of you have asked me for an update on PayPal. PayPal is down another 7% over the last 5 days. It's down 81% over the last 5 years. It's been a really tough stock to hold. There's a lot of jokes on X, such as this one, which is that this is the year 2050. Astronauts and the agents are on Mars and humanoids are everywhere. And PayPal is still trading at $50 buying back the stock. And it's been really, really bad. But now you have a new CEO. And I told you guys, whenever you have a new CEO, you have the potential for a turnaround, the potential for a change in sentiment. This is what's happening with NVOs. The new CEO is doing really, really well. The stock is starting to turn. It also happened with Celsius, Starbucks, and even Chipotle before, and a few others. So I'm going to talk about PayPal again, talk about the new CEO, the strategy around it. It's a very interesting strategy. So I really hope you enjoy it, as always. Now, for PayPal, they put up decent revenues, which was a beat. They also beat on earnings per share, but they slightly missed on guidance expectations. But looking at revenue growth, it has grown 7% in revenues. It's been improving. It was 3%. It was 1% a year ago. They went from 1% to 7%. That's not really bad. I mean, if you look at the chart, you wouldn't believe this is a company that's growing 7%. You believe like this is some kind of an alcohol stock that's, I don't know, declining in volumes or declining in revenues. But there's nothing even close to that with PayPal. If you look at the active accounts, they normally grow about 2 million a quarter. This quarter was flat, quarter on quarter. So this is not a good sign at all. But sometimes you have hiccups, like they had a hiccup here and then they grew again. Like one quarter is not enough. But if active accounts start to decline, then maybe you could say this is a concern. But it has been growing 2 million a quarter over the last 3 years or so, which is really amazing. If we look at total payment volume, it has also been growing over the last 2 to 3 years. It has declined quarter on quarter, which is not a good sign. But again, it happens and maybe it's going to reaccelerate. But if PayPal was, I guess, such a bad company, then why is it growing 7% revenues? Why are active accounts increasing to about 440 million people on using PayPal, I believe, on a monthly basis? And, why is it growing in payment volume? So the whole thing, again, is it kind of makes no sense. And I'm going to give you an example later in the video. But if you look at the crown jewel of PayPal, it's Venmo. Venmo went from growing 10%, 13%, now it's 14%. On an FX neutral basis, it's growing much faster than any other business that PayPal actually own. Venmo is more innovative, is more for younger people. They love using Venmo and it's really popular and all these things. And that's really good. And the CEO is trying to unlock the hidden value of Venmo within PayPal in general, which is why he wants to separate Venmo's financials into a separate, you could say, structure. It's still going to be within PayPal, but they're going to report them separately, which will kind of help investors realize the value, and they might even get a buyer for Venmo. And this is what they said. They said Venmo will soon be its own standalone segment within PayPal, making it easier to track its progress or potentially sell the business to another company with people familiar with the matter. And this is something I've been saying for a while, that I believe PayPal will most likely end up getting acquired. The company has, again, access to about 400 million people. They're still growing. They're not doing great on execution. The CEO is trying to improve it. He wants to, I believe he hired some kind of an AI, artificial intelligence group led by someone that used to be a tech executive at Walmart. And he also hired a financial services unit that's led by a former Goldman Sachs person. So you're trying to improve efficiencies within the company. But again, my thesis is that the company will get acquired. Maybe they're going to just sell Venmo alone. That would unlock a lot of value for shareholders. But what are they going to do with the cash? Just buy back the stock or give it as dividend? So I don't know if this is really the best way to go about it. But I think separating Venmo alone will kind of help investors realize the value. Like, yeah, okay, there's a PayPal segment. It's not growing as much, but you have Venmo growing double digits. You have Venmo doing this, Venmo doing that. So that could actually help change the sentiment in general. And this is something that hasn't been done before. The previous CEO hasn't done it. He said he's going to shock the world. He only shocked investors and he hasn't shocked anyone else, and he got fired. But that it is what it is now. Now, in terms of guidance, it was, they pretty much kept guidance. Everything is the same. slight decline in transaction margin. Not the best guidance you would hope for, but free cash flow generation is still robust. They expect free cash flow about 6 billion. They have about 1 billion in stock-based compensation. So the net free cash flow is about $1 billion. If you look at the free cash flow yield right now, it's about a 15.8% free cash flow yield. I made the calculations. It's about 20% of the free cash flow, which you could have to remove about 2.5% of the free cash flow yield. You'll end up with a net free cash flow yield of about 13%. So the company is trading at a 13% free cash flow yield. If they want to pay all of their free cash flow as a dividend, you would get a 13% free cash flow yield. Now, that doesn't really happen very often. And I've seen it happen before. Like, I used to own a company called BTI, British American Tobacco. And and people believe it was dying, right? And the chart was flat for many, many years. But BTI was paying a 10.5% dividend, and the free cash flow yield was, I believe, 15 or 16%. And the company was still growing 5 to 7% in revenues. And the company the stock wouldn't move. They buy back the stock, they pay a 10% dividend, and the stock wouldn't move. And all of a sudden in 2022, the stock started moving. I was up like 40% in a few months, and then it keeps moving and it's still going up till today. The yield went from like 10%. Now I think it's at 7 or 6.5, or it's getting actually really expensive. So you don't really know when the sentiment is gonna change. But in terms of value, 13% net free cash flow yield for a company that's actually growing about 7% in revenues, 5% in the quarter, that's really not bad at all, you know. And the company is doing the right thing by doing buybacks. They've been reducing shares outstanding and doing everything right. And again, the stock wouldn't move. And I think a lot of shareholders, they take it too hard on themselves, that it's a trap and they were wrong and all these things. And maybe they were wrong, but sometimes you have a company that could do everything right. And if people just believe that the sentiment is bad, it could remain flat for a while. I mean, if you look at Alibaba, it remained flat for a few years. But once Alibaba started moving, shareholders got paid years and years worth of returns within a few months. You know, so sometimes you don't know when the market is gonna agree with you. But in terms of value, it's really hard to say the stock's overvalued. It's hard to say it's a trap because they're still growing, they're still improving payment volumes, transaction volume, new accounts. Hopefully, they're going to improve again. Revenue is growing 7% on the quarter, up from 1% the year prior. And they're buying back the stock. Maybe they're going to be paying dividends soon. I think that would help a little bit. So again, I believe the stock's undervalued, and I think there's a lack of patience from a lot of investors, and I don't really blame them. I mean, if you bought any stock over the last 5 years, you outperformed PayPal. Even Nike outperformed PayPal. But again, I believe the stock's undervalued, and we'll see what happens with the new CEO. And that was just my opinion on PayPal. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.